Boom, boom, boom. Yo, yo, yo.
Wasabi!
Hey, good morning. Happy Tuesday. Hope you had a nice long weekend. Celebrated your unions appropriately. Hope everything is sound as a pound. Did you see the pound? Oh my goodness. So anyways, welcome to Fast and Furious Forex. We are going to look at, well, normally we do euro dollar. Do you want to do pound dollar today just for fun? Yeah, we could do that. What else should we do? Gold, oil, Bitcoin. Anything else? You can just look at the charts. Do you want to look at the Commitment of Traders report? No, you should have already done that. Should have done it this morning. You should have done it yesterday, Saturday, even Friday afternoon. We have a whole session at TRADARS focused on reviewing the Commitment of Traders report. Did you see the move in the Rand? You should have. So anyways, let's get going. So welcome to Forex.Today, the YouTube community of 21,500 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So my name is Wayne. I will be your guide on this thing we call Forex. So let me know how I can help, and I will do my best to serve. I consider myself a servant leader. Cool. So today we're going to use TRADARS, and we're going to use the Trader's Way MT4 platform. Yeah, baby, yeah. And we can do both technical and fundamental analysis, which is the whole point of what we're doing here, huh? How does the market feel? What is the market? What is the marketing thinking? Oh, I never noticed that before. What is the market doing? So we have to know all of that. So one of the things I covered this morning at traders.com was the seasonal shift, okay, in peaks and valleys of flows. We got it down not just by the month, but by the week. And check it out. That's why we know it's week 36. See, right here. It's week 36. Why does that matter? If you don't know the answer to that, then you are not going to be as successful as you want because other people do know. It's quite factual. And then we looked at correlated markets and found that the correlation suggests exactly the same thing. So it makes sense. Well, every trade you make should be logical and intelligent. Let's get a headline news update.
COC 40 slips amidst fiscal concerns.
Gold retreats from record $35.08 as U.S. dollar and yields rebound.
ISM manufacturing PMI expected to gain slightly in August. Yen underperforming most G10 currencies, Scotiabank. The upswing in the metal markets is likely to subside again, Commerzbank. ISM manufacturing highlights the U.S. economic calendar as futures worsen.
Oil prices climb on Russia-Ukraine tensions and await OPEC meeting.
Pound weak and underperforming G10, Scotiabank.
Yeah. Brazil gross domestic product, QOQ, above expectations, 0.3%. In 2Q, actual, 0.2.
Brazil gross domestic product year over year came in at 2.2% above expectations, 2.1% in 2Q.
Yeah, very nice. Get our update on the macro. Boom, 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 boom. Okay. Yep. So I think yields are going to rise today. Bitcoin back below 110. We were at 108, maybe even a little bit lower over the weekend. I'm waiting for it to get down to 100 so I can buy it. Dollar slightly strong right now. That's sort of leaning toward the risk off. Right now we're flat. Scatter plot looks scattered. That shows us non-directional, although many things that we expect to be up are up, and many things we expect to be down are down. The only problem with that is there are many outliers, you know? And you're like, huh. Yep. So, anywho, so let's go to our charts and see what's going on technically. We haven't done this for a while. And we have an up in progress. There's a roll reversal there. And the next one is higher up. Okay. We're going into this trading day risk off. One of the things we discussed this morning at traders.com is that it's perfectly, totally normal. I showed a chart showing 20 years of price action and correlated that with 5 years of price action, and then correlated that with what's happening now, this year. Hey, that's pretty smart. I know. And this is right as rain. It's normal. It doesn't always happen, but it often happens. And so not only did we look at this one day, we looked at how often, this is why we're looking at the week of the year. If this goes up, when does it peak? Or if it's the other way around, euro dollar, if euro dollar's falling, when does it trough out? So if you were, let's say, long-term short this asset, okay, somewhere between the 21 and 55 weekly, you would sell it, right? Oh, I just drew resistance lines there. Yeah, you're welcome. Problem is we don't know how many weeks is that, but normally, let's say, it would be very unusual, I think, for USD CAD to go any higher. So that this is like this week, next week. So let's say in the next 5 candles, we go from green candles to red candles. You need to know, is that a potential peak? And based on 20 years of analysis and 5 years of analysis, what happens next? If it goes up for 3 or 4 weeks, does it fall for 12 or does it keep rising for the next 12 weeks? 12 weeks being a quarter. Well, if you don't know that, then you don't know what normally happens, and then I don't think you have an edge. So when we reviewed the COT report this morning, we noticed, or I noticed, a couple of assets and flows of capital that suggested hedging, which means those people saw this coming. Which means, how did they know? They have the data. Maybe they subscribe to traders.com. But hey, look, people know these things. So it's right. It's your fault if you don't know. So anyways, up is up. So what is your contingency plan? Now, I'm not in love with the Canadian dollar, but, we were looking, at, or I was talking about pound. Let's try to describe pound. Okay. We had this price right here. Okay. Let me get rid of this old stuff. Okay. This circle here, we had that price set in stone on January 1st. We tested it here. We tested it here. We tested it here. We breached. We pulled back. We tested it again. We tested it again. And we tested it again. Some people don't know that number or why it's important. Is it my fault they don't know? Mm-mm. Is it your fault they don't know? No. If you don't know, it is your fault. Because that was January 1st. And so now, if you understand what is happening here, it might show the magnitude of importance. Are we going to do that or are we going to do that? Okay. So some people are shocked this morning. Well, imagine you're at this price. 135 30. Let's say 30. 135.35. Okay? And you knew that on the first day of the year. You also knew that the next 3 weeks are down. Let's say you assumed that. Starting, okay, September, the first trading day of September. Okay? Let's just say you had that assumption. So you were combining price and time right here to say probably bearish. Then you would be able to make proper decisions, right? See, the price is based on basically implied volatility for pound dollar for this year. And you knew it in January, you knew it in February, you knew it in March, you knew it in April, you knew it in May, you knew it in June, you knew it in July, you knew it in August. And then as far as time, what if you thought something like this? So I'll change the scenario. Was most likely to happen based on things like seasonality. Well, then the time and the price combination matter. The magnitude of the knowledge is increased. So what if we have, let's say 2 down weeks, and then we get here? What would the meaning of this candle be to you? Well, it depends if you believe in life after love. No. If you believe we're on our way here or on your way there. Okay, that's fundamental analysis of macroeconomic data and then doing comparative analysis of that macroeconomic data of the UK over the US. Okay, that sounds smart, right? It is smart. All right, so look, if you thought based on your research that we were going to be up here, and you also, based on your research, felt like this time of year had a high probability of down, but your belief is then there's a high probability of up continuing from somewhere in this time to the end of the year. Let's say you just thought that that was the case. I don't know what you think. I don't know if I'm right. I don't know if you're right. So you have to think something. But if you thought up, wouldn't you agree that if you got into this price zone, which is also an annual pivot, that's somewhere between this and that, it turns green. Suddenly you get a green candle and you think we're going here based on research, not how you feel. Based on your research, your conclusion is that it's going to come down to the zone and turn green. So if it came down to that zone, turn green, would you have the confidence to take the shot? Now, if you think everything's random, you will never have any confidence. You cannot confidently pick, how do you say, you cannot be consistent in random chaos. That's kind of what random chaos means. Chaos theory is patterns inside the chaos. So yes, pound dollar could be worth whatever the market chooses. That is true. Changes in monetary policy at the Bank of England or the Federal Reserve Bank of the United States could also dictate the price and the timing of all this. True. Correlation, geopolitical shocks, supply shocks, an asteroid, a hurricane, socialist revolution, all the worst things in the world can impact this. Totally true. That is chaos there. Now, if it's random, you should just quit. Because mathematically, you're 100% likely to fail. If you think all of this is random, or it is random to you, you should either get on the clue train and become more knowledgeable, or you should quit. Because mathematically, it would suggest if this is random, there's no way, no mathematical possibility whatsoever. Or it'd be very, very, very small, I should think. For you to be successful. So, for example, you guys know thermodynamics and the second law of entropy? It's like if you look at sand dunes blowing in the wind, they're constantly changing and it's constantly random, depending on which way the wind blows. Now, wind blows based on thermodynamic properties, such as high pressure and low pressure, hot air versus cold air, all that kind of stuff, right? And the wind blows. And when the wind blows, we can look at the way it blows by observing the sand dunes, because the sand dunes are more easily seen than wind. Okay, great. So there is a normal law. Sand dunes tend to take current certain shapes. Now, it's mathematically possible that the wind in the desert can blow in such a way to make a beautiful sandcastle. It's mathematically possible that randomness can take shape. There's nothing in the laws of physics, and in this case thermodynamics, to say that the wind cannot make a sandcastle. But it's highly improbable or improbable. So in that case too, like, okay, that randomness can create very interesting and beautiful shapes, but to create a structured shape in a very particular fashion, so you say, oh, that's not a sandcastle, that's a sand house or a sand boat. or a sand banana. You're like, oh, look at that. The wind made a sand banana. Okay, well, it's just as mathematically likely as a sand castle, or maybe the banana's easier, but nonetheless, all of it is very unlikely. It's possible, it's unlikely. So if you believe these markets are random, by definition, there's no way you can be consistent. Otherwise, if you're consistent, then it's not random. So if you feel like these markets are random, either figure out what you're missing or start a vending machine business. Yeah, so it's not random. And like, look at this price. Like that price, we calculated on January 1st. Really? Uh-huh. Is that random? Well, I would say it's unlikely. Look at this. Like, we don't even spend one day above this price. So this would suggest that you're walking through the desert and you found a sandcastle. Beautiful sandcastle with turrets and everything, right? You're like, wow, look at this beautiful sandcastle. So you have two choices. The wind made the sandcastle, or there's somebody else nearby. Well, it certainly wasn't random, so it wasn't the wind. So there's somebody there. How did this get created? Somebody or somebodies knew that price too. Everybody at TRADARS, but we're not that big. We're huge, but we're not that big. So therefore, lots of other people knew it's not random. It's organized. And thousands of people traded billions of dollars knowing that. And see, I'm the type of person where as I taught myself trading, I made many, many small discoveries. But it would piss me off beyond no belief. Just, I would get mad that I didn't know that. Well, hell's bell. How did thousands of other people know that and have so much confidence in it? They put billions, tens of billions, hundreds of billions of dollars. Hey, dude, it's a $7 trillion a day market. It could be $500 billion on this trade. And I didn't know? Dude, that's when I get mad. I can be a wee bit competitive, a wee bit obsessive. For sure, obsessive. So, how do you treat that? How come you didn't know that? And everybody else did. See, that's what kept me up at night when I was teaching myself how to trade. How come I didn't know that? What importance does it carry? How does the market use it? Because remember, I didn't have a coach. I didn't have a mentor. I didn't take a class on how to trade Forex. There wasn't a book. So I would look at this and say, from my observation, for some reason, look at this. For some reason, this price is important, and everybody but me knows it. So how do they use it? Why is it important? When is it important? And I would observe until I felt like I knew it. Isn't that cool? And you're like, wait, that's not random. Now, if it's not random, does it mean I know this is going to crash? No, 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 no. I woke up just like you and said, holy snickersnot. Okay, that I don't know. I'm not so arrogant or dumb to pretend that. But I do know the importance of that line, and I do know we've hit it many, 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 many times before, and it's always been important. And the interesting thing is, before it was important, I had done the calculation to say it has a high potential of being important. We did it here. Let me do it. Let me circle it. We did the calculation and set it in stone right here. Okay. So on that moment in time, we said, well, if we ever get up to this price, it's probably going to be important. So we don't know what's going to happen. We just know probabilities. Okay. And we know it is important. Then you add, well, why is this point in time important, Wayne? Why did you care about that one day to set these prices? Well, that's a good answer. And then you're like, Wayne, so based on time again, this right here is a period in which pound dollar often falls? Yeah. Yep, that is true. Yep. So you combine them, and then maybe it has a different level of weight, you see? So now, if you were you, don't you feel right now that you would like to know the probability of this versus this? Everybody at TRADARS knows. And now we know what's normal, aka probably going to happen, higher probability. And then we can spend our time looking at, not trying to figure out what the market is doing or should doing or whatever. We can look at the uniqueness of our situation, whether it's geopolitical risk, fiscal policy, monetary policy, and all that kind of stuff, and say, well, if we know what normally happens and when it normally happens, maybe we can understand why it does or does not happen this time, which is a much different thought process than, should I buy pound dollar, yes or no? You're like, dude, that's your level of inquiry? Yeah, not competitive. Remember, I believe this is a competitive sport because we do know it is a zero-sum game. We can't kind of get around that. If you're long, someone else is short. One of you is right. One of you made a wise decision or is lucky, and the other one has made a dumb decision or is lucky, or made a good decision and unlucky, or a bad decision, whatever. You see, like, so it very often, but not always, it comes down to who made the better decision. And let me put it this way. Let me take one scenario. Let's say your analysis leads you to think this falls for 4 weeks and then rises for 12. Okay? Down 4, up 12. Okay? Let's say that's what you believe from your analysis. Tells you short-term short, and then you can take price action into account. So now you'd say, well, probably down, and then up, and then down, and then up, and then double bottom, then higher high, higher low. And now you can refine it. One is strategy, one is tactics. So now, all of a sudden, now you got 4 weeks down, but really it's 3 weeks down, 1 to 2 weeks of consolidation, and then a higher high, higher low, okay, now you're getting more and more intense. So short-term short, profit taking, short-term short, profit taking, double bottom, potential long, higher high, higher low, have to be long. Maybe these prices and these prices are going to be important. So now you're doing technical analysis on multiple time frames, creating an actual trading strategy around fundamentals, technicals, and seasonality, and trying to time up the uniqueness of 2025 versus 5 and 20 years worth of quantitative data. Or it's all random. Or you just never know. Okay. I started with this. Actually, I didn't start with this. I got to this. Okay. This is my tried and true, trusted setup that is in my book. My book is all about this. And I still think, even though I don't really use stochastics and MACD on my charts anymore, I calculate them all the time with my brain. I totally see them. I don't even recognize that they're not on my charts anymore. They still matter. I just don't need to plot them. Because once you understand how your indicators work, well, it just makes sense that this is going to bring Stokes down. I mean, that's what Stokes does. Okay. You can tell the MACD is at the waterline. It's still crossed up, but is thinking about crossing down. I mean, dude, I don't need to draw it. I can see it. But whatever. But now the next thing is I learned over the years to add additional layers. So I don't need this anymore because I can see it with my mind, my mind's eye, as I talk about in my book. Okay, and I see that with my mind's eye. So I still use it. I just don't plot them. I can see it. Okay, great. Another major breakthrough, because this is basically me studying price action and market forces. Right? Simple. But I did this for a long time. But remember I said I used to get mad? I used to get mad because I didn't understand, like, why did that occur? So I bought this one, I bought this one, I bought this one, I bought this. What the fudge? Right? And then you buy this one, you buy this one, and you buy this one, you buy this one, you buy this one, you buy. What the fudge? And I would get pissed. Like, I did the same thing over and over again, but got different results. That's not supposed to happen. So I said I would get mad. Why did all these guys know to get out and not to re-enter? How did these guys know? And how come I don't know? That's where I get mad. Turns out this is about September last year. Oh. And here's September this year. Oh. Maybe it's not random. Yeah, maybe. So that's where I kind of start to find seasonality, because I also like to buy around here. Does anyone know when I like to get out of my long positions? on pound dollar, just from the top of your head? Canada Day. Canada Day is right here. Oh, what? So if I traded with no charts, but only with time, no price, just time. No, if I was buying January. Okay. It's actually January, end of March. Okay. Keep going. And then this is the take profit. So this is normal. So I discovered time, which we now know as seasonality. Yeah. Oh. So then once I started to notice that, I'm like, but why did everybody know this price? Why did everybody know this price? What the heck? I have a general idea of when to expect it, but how did they know? And it's very precise, like everybody was in on it. So I did what everybody in my situation at that time did, and that realized that old, gray hair, rich white men running banks would be drinking whiskey and smoking cigars and laughing at poor people. So I'm like, well, that's what I'm going to do too. So I went ahead, became male, became white, became old, grew gray hair, drank a lot of scotch, smoked a lot of cigars, and I got it all figured out. That there's price and time. So now we add here custom biased pivots. We're in bullish mode. Okay. Predict the annual high. Oh, weekly. Oh, this one doesn't have annual. All right. Let me kill it. That's not what I want to do. So delete. So we'll have to, do I have it in a different way? Template. I just want to show you it's not random, right? I was thinking, so this is too short term, too short. This is weekly. Well, all I think I have here is annual pivot points, not one with bias built in. So I'll just have to put it back. And we're right back to where we were. So now if you have the data, okay, this is not abnormal time. Look at the price. It's not perfect, but it's pretty logical. Just like this is about that price, and then we consolidate around that price. We definitely use this. So there's some sort of level of time and price. We hit at the time down was possible. We hit a point in price, and then it did come down. Then in this period of time, I usually look to buy. This period of time, I usually look to buy. This period of time, I usually get out. So now you start looking at price. And so what prices tended to be important? Well, this time and this price, okay? This time and price, okay? And this is a second coming. This idea of down is actually pre-known, and this time of up is also pre-known. So to catch the time at precisely 1 27.48, and you knew that 4 months in advance. Very helpful. It's not perfect, but it's helpful, don't you think? Huh? That this price is important. This price is important. This, right? Over and over, even as support, and then as resistance again, and there's resistance. And now we're entering this zone. So I repeat, I am not suggesting that this is going to happen. But it's happened before, and are you ready for that potential? So now if you had that in mind, you could do things like use your commitment of traders report. Are people getting out of pound and into dollar? Are they doing this in the futures market? Are they doing this in the options market? Oh, well, hell's bells. Those are good questions. Are you asking the right questions? Or are you chasing stochastics and MACD? Wayne, I learned from some YouTube guru how to scalp using the CCI. Uh-huh. Well, good luck with that. Good luck with that, bro. So the price time continuum, they matter. The thing is, how competitive will you be if all you knew was price, but you didn't have any clue of the time? And you're going to get in that frustrated mode that I was in where I didn't know this reversal, but I definitely caught this, and I definitely caught this, and I definitely caught this, and then I gave half of it back. If I had only known about these changes of trend, that the probability of them occurring was increasing, I would have behaved different. I could have said, well, this time of year, I take profits on my shorts. On this time of year, I take profits on my long. And I'll decide later whether to short, but I at least if I can only be aware that this is likely, then I can get out based on unfavorable price action. And I can get in here, and that'll be great. So I'm out here, in here, in here, in here. And then I'm like, well, you know what? Somewhere around this R1, M4, because it could have spiked up first, right? So I would have approached, if this time of year it usually collapses, I have two prices, R1, M4, in which I could look for an observation of no longer up. How do you feel like no higher high, 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 lower low? But you know what? That's exactly what stochastics is measuring. And so stochastics, of course, I don't have one on my chart. I don't need one. Is rising, 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 overbought, 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 and then crossed back down into the zone. I don't need it on the chart. You should know the math. If you don't know how your indicators work, why do you use your indicators? Wayne, they're magic. Fibonacci is based on the rules of nature, like the tortoise shell and the cherry blossom tree and the sea star. Oh my God. Just trust it. It's magic. Can't argue with the laws of nature. Oh my God. Really? Anyways, I want to remove all randomness from your trading. I want to bring consistency through proper analysis, and you're going to need data. Lots and lots of data. You're like Neo. Lots and lots of data.
I know jiu-jitsu.
Yeah. That's what I want you to be like. I want you to sign up at traders.com. I want you to be like Neo. And I want you to just devour our data and our training. Yeah. So you won't be able to predict the future, but you can be prepared for it. There's a big difference in attitude, but guess what? Hurricane season's coming. You should have bought water. You should have bought batteries. You should have bought plywood. Okay? You buy it in May or April. I don't know when hurricane season is now. You don't wait for the hurricane to hit and then do something. You see what I mean? Now, if it's random, like predicting earthquakes, you're going to fail. If earthquakes are random, predicting them accurately over long periods of time is a fool's errand. Hurricanes are somewhat random. You know when they're likely to show up. They've been going on a long time, repeating a reliable pattern, kind of like spring, summer, autumn, winter. That pattern's been going on a long time. Now it shifts over time, but it's generally true in somewhat consistent fashion. There's a dry season and a rainy season. There's a hot season, there's a cold season, and then there's a transition in between. There's a time when you're going to get hurricanes. Now check this out. Did you know the soil in the Brazilian rainforest is sterile? Yet they have more trees than the stars in the Milky Way. How's that possible? So ask any Brazilian that's illegally chopped down a whole bunch of trees and then put in a farm. Guess what? Nothing grows. The soil is sterile. Yeah. So it's because of hurricanes that have been going on a very long time. In North Africa, there used to be a giant inland sea a long time ago. Yeah. Huge. Like 20% of the world's fresh drinking water kind of thing. Huge. Like a Great Lake, just the size of a country, bigger than that, right? Anyway, climate changed and it dried up, leaving mineral deposits. That also changed the weather patterns and it got hotter in Africa. And soon everything became desert. The lake was gone. The minerals were left on the ground. And the wind started blowing from Africa to South America. And to this day, you can be in Brazil and you have to brush up the sand, the African sand, from your front doorstep. If you're taking a boat from Brazil to Europe and you're in those trade winds coming at your nose, guess what? The boat gets sandy from the African desert. Guess where that sand lands? The Brazilian rainforest. And the sand is rich with nutrients and minerals that fertilizes the rainforest year after year after year after year after year after year. If that process stopped, the entire Brazilian rainforest would die. Because it rains so much there, it removes all the minerals and nutrients out of the soil. So every year it gets refertilized. My point here is the pattern of hurricanes has been going on a long time. Every year is different. Every year is the same. You're like Siddhartha, the Brahmin prince, meditating next to a river and realizing the river is always the same and always different. Farmers know this. Every year is the same. Every year is different. Now, if you can make that congruent, where you understand every year is the same and every year is different, you're not focused on the same because you already understand that. The same is probabilities. We're probably going to have a hurricane this year. We're probably going to have many hurricanes this year. What day is it going to hit? I don't know that. But I know when I should buy plywood, fresh drinking water, a food supply, batteries, and everything else I'm going to need. I don't know what day to plant the wheat, but I know when to be ready to plant the wheat, and I know when, even before that, when they do maintenance on my tractors and my other equipment. I know when to order the seed. You're ordering seed when there's snow on the ground. Why? Because you believe in the middle of April or at the end of April, you'll be tilling the soil, and then you will be planting the seeds, and then you're going to need some fertilizer. Well, you're probably going to need to order that before you plant the seeds. And all of a sudden you put everything. Lewis says, I wonder, what more is concealed from the public knowledge? I don't think anything. So at this point, it's ignorance, meaning you simply just don't know. Yeah. At that time, when I started, it just wasn't public knowledge. You had to have the databases, right? I slowly discovered pivot points. I slowly discovered price action. I slowly discovered seasonality. And I tested 10,000 things that don't work. Probably everything you see on YouTube. Much of what you see on YouTube doesn't even mathematically make sense, but people like to get rich quick. Not rich people, by the way. Rich people don't like that. Because reward is a function of risk. So the only person that would risk it all is somebody that has nothing to lose. Someone with tons to lose will not risk it all. You see? So mathematically, most of the strategies doesn't even make sense. But then when you start to talk math with people, they just tune out. Like, I know you don't like it when I say, oh, well, I can just calculate the stochastics with my mind. Yeah, well, I know how it works. It's not that hard. It's not that complicated. You should probably know these things if you're using stochastics. Hey, man, what does it actually do? So at this point, like COT, right? Larry Williams was the only guy that taught that. And it was sort of revolutionary. Technical analysis, when I first started trading Forex, was laughed at. I bet you can't even imagine a world like that where people laughed at you. People laughed in my face because I used charts. Yeah, there was a world like that, right? So lots of things have changed. And now, like, you don't know COT, that's your damn fault. It's knowledge. It's public knowledge. I did an hour and a half training on how you can get it for free. So you're like, well, Wayne, that takes too much time. You're not going to be filthy, stinking rich. That's it. You don't have it. You don't have what it takes. You don't have the right stuff. You don't have it. Wayne, seasonality, it's too complicated for me. Wayne, macroeconomics, it's all a lie. None of it matters. You're like, well, you know what? I went to Harvard for 5 years to get better than I already was because to me, it was worth it. I had more to gain than lose. It was only a couple $100,000. I had more to gain. So maybe I became a 5% better economist. Yeah, well, I did it. I'm willing to do whatever it takes to be the most competitive. Right? And I think it's the attitude. It's not the money. Don't worry about the money part. Do the work. Obsess. Are you obsessed? I'm obsessed. There's something wrong with me. I'm sick. I'm obsessed. You should have seen me over the long weekend. I'm obsessed. I worked all weekend. All weekend. 6 a.m. to midnight. I worked. And I love it. I love it. Yeah. Now that's cool, right? You might think, well, Wayne, that's terrible. Well, right now it's what I love. I'm passionate about it, right? And so I'm just trying to be the best I can be, to borrow from the army, right? Or all I can be. Yeah. So Lewis is like, what's more concealed? Well, so let's see. In the last week, I've been to the Bank of England's website, the Bank of Canada's website, the Federal Reserve of St. Louis website, the Federal Reserve of Atlanta website, the Reserve Bank of Australia website. I've been to the Bureau of Labor Statistics. I've been to the Bureau of Economic Analysis. I've been to the OECD. I've been to OPEC's website. I've been to the EIA website. ONS, right, for the UK. I've been to their website. Eurostats, been to their website. Bank of Japan. That's like in the last 7 days. Probably in the last 4 days. You're like, dude, yeah. Well, so I'm just trying to show if I'm doing that, there are other people that are doing way more than that. Like, I'm just trying to keep up. I'm trying to be competitive. So if you're not doing that, then you're not keeping up with me, and I don't feel like I'm doing enough. I wake up afraid I need to do more. I need to compete. You know, if I was a professional athlete, I want to win the championship. And then I want a three-peat. And then, well, the Bulls three-peated. I want a four-peat. Because no one's ever four-peated. And then you might as well go for 5, right? Obsess. So anyway, look, you can get all this information. I just showed you the level of work that I do on just that research side. TRADARS automates all that stuff. So you don't have to do that. Okay? $200 a month solves your problems. Okay? Yeah. $200 a month solves your problems. Commitment to Traders Report. We already did this today. Okay? It's beautiful. Okay? It's beautiful. Look at that. It's beautiful. And let me give it, so that costs you $200 a month. Let me give it to you for free. Who would like this for free? Anybody here? Let go. Anyways, who would like this for free? So funny. Why won't my mouse let go of it? Yeah. All right. Let me give this to you for free. This is current as of Friday. This is where we get the data. Here you go. Everyone here can have this for free. This is where 20 years ago, this is where I was getting my information. This is the information we pull so that you have a COT report at traders.com. All the information is there. This is the Canadian dollar, the position long, the position short, the change week over week. It's all there. Those are dealers. Here's institutional. Here's hedge funds. So maybe just track hedge funds. So hedge funds are heavily short the Canadian dollar. And they got more short week over week. Cool. There it is. And you have this for the Swiss franc and the British pound. I used to do this every Friday. And then I paid $300 a month to get it more visually and less, like I'd actually download this as a spreadsheet, right? So then I didn't have to go to, let's do Australian dollar, leveraged funds, 32,000 short, 28,000 long, so it's about 50-50. The change over week looks like we lost volume on both long and short. So, okay, I didn't have to do that. I could just get it visually. Mexican peso, Brazilian real, Kiwi dollar, South African rand. Did you know all this existed? So Lewis is like, what more is concealed? This was never concealed. I've been reading this report for 20 years. Then I paid $300 a month to have it visualized. Now it's included inside of TRADARS. One page used to be $300 worth of value. Now all of TRADARS is $200. Like, it's so dirt cheap to run a successful, small institutional firm like your trading office, even if it's out of your home office or your home kitchen, your mom's basement. Doesn't matter. You don't have to trade like an amateur, like a chicken with its head cut off running around making a bloody mess of your money. You don't have to trade that way. Why? Why would you want to do that? And so if I were me, if I didn't have any money, I would now be obsessed. You understand? I would be obsessed, and I would just search YouTube, search Google, ask AI. I would find old books at the library. I would find every piece of knowledge, and I would learn absolutely everything. I would work day and night, night and day, and I'm not joking, until I mastered the commitment of traders. And you could do it 100% for free, or it could be one page out of 100 pages, and you just pay the $200 a month, and you have me explain it to you every week. And you work with Meta, and Meta works with you every week to figure it out. Oh, the freeway is slow and arduous. The $200 is cheap and easy. So whatever, if you have less money but more time, teach yourself. Get the data. It's free. I gave you the link. Every week they give it to you. Right. But if you're like, Wayne, I have some money, but I don't have a lot of time. I need to learn this stuff, and I need to find success sooner than later. Well, then give up the $200 and gain years of time. That's how I look at it. Yeah. Yeah, like when I first started trading, there was no gurus or even books. So one of the things I did is I signed up for industry magazines because I used to be a venture capitalist, and back then we got like import export trade magazines and stuff. So I was used to reading about import export, and that maybe that was what caught my eye in Forex. But suddenly when I went to my own home office and I quit my VC job, I'm like, you know what? I need that import export magazine. So I signed up, and it was like $300 a year or something. And then I'm like, ooh, I like trading oil. That made sense to me. And I'm like, oil is money. It's just a different form of money. So, I mean, if I had a barrel of oil, I could trade it for something. It's just not efficient, but I could do it. So I'm like, okay, so oil is money. So I need an oil trade magazine. And you had to be in the oil industry to get this magazine. So I kind of fudged the application a little bit, and they're like, oh, and that's going to be $300 a year. So, for 4 magazines per year, one per quarter. And all of a sudden, I had something like 18 newspapers and magazines. I spent thousands of dollars a year to get the Wall Street Journal and the Investor Business Daily and the Financial Times, the London one, not the US one, and Nikkei Weekly. I had flown out from Japan. It wasn't available in the United States. So I had it sent to a post office box, and then the post office box would mail it to me in the United States from Japan. Um, so it was like whatever it took. You understand? Like literally. Had a newspaper subscription to Nikkei Weekly newspaper. It's in English and it's financially focused. So it's like the Wall Street Journal in English in Japan. Then I had to have a mailbox. So that's where it was delivered. Then the mailbox people would mail it to me. So I had to pay for this newspaper. I had to pay for the mailbox. I had to pay for the mail forwarding. I had to pay for the postage. And eventually, I got the Nikkei Weekly because I need to know everything about Japan and Japanese politics, Japanese economy, Japanese everything. And I needed boots on the ground, and this was the cheapest way. It only cost $1,000. You see? So your cost of trading right now to run your small institutional business is so ridiculously cheap compared to 20 years ago when your computer was $5,000. Just the computer. You had $10,000 in monitors. Your internet connection was $300 a month. Your charts cost you $150 a month for your charts because your trading application, your trading account didn't come with charts. You couldn't use a credit card or crypto to fund your Forex trading account. Like FXCM, for example, you had to wire the money, and the smallest account at FXCM was 5,000 US dollars. So if you didn't have 5,000 US dollars and pay the $50 or $100 wire fee, then you couldn't have an FXCM account. But then you got FXCM's trading account, but you didn't have any charts. So back then with FXCM, you would use IntelliChart. And IntelliChart, so now you have charts, but they're like $150 a month. They're not connected to your trading platform, so you can't do your analysis and then buy and sell. No, you do your analysis, and then you go back to your trading account, and you go back and forth. What was the stop again? 129.23. So 1.3. And the limit order would be one, and oh my. So your small retail Forex trading business that you were doing out of your mom's basement 20 years ago probably cost you $5,000 by the time you add it up. And now you're like, dude, it's all practically free. I mean, come on. Right? So, anyways, Bloomberg retail, a Bloomberg terminal for retail Forex traders, it's $200 a month instead of $2,000 a month. My hedge fund friends laugh. They think TRADARS is so cheap, it's stupid. They think I'm dumb. They're like, dude, I pay $2,200 a month per Bloomberg terminal. I'm like, I know. And they're like, that's dumb. But they did subscribe to TRADARS. So they have Bloomberg and TRADARS because it's so stupidly cheap. Yeah. Anyway, this is it, man. I think life's great. Life is good. Life is beautiful. You execute everything through Trader's Way. Oh, my goodness. And if you open your Trader's Way account through us, they give you some of your spread back at the close of every day. So your spread is actually a little bit cheaper. Thank you, Trader's Way. Nice, right? Yeah. Well, I'm obsessed with a project that I'm working on. I am not joking. I even worked on it while I was sleeping. I dreamt about it. I had to wake up at like 2 o'clock in the morning to get my mind to stop because it was working. I'm like, I'm not getting any sleep. But I am totally obsessed on a trading project I'm working on. So I'm going to have one eye on the charts, one eye on my project. But I want to show you that today was shocking that pound was down as much as it was. It fell more this morning than it's moved in 3 weeks. And if you're here, it seems like total chaos, anarchy. And yet, with a little bit, follow up with me today on how let's just get it, knocked out. Yeah, it's one of these things. I've just been obsessed. But you're right. Let's set something up. September, October, December. It's perfect. Perfect timing. So, anyways, it seems random. It seems like a hurricane, the largest hurricane ever seen in the history of mankind. But also at the very same time, it's not random. If it's hurricane season, you might get a hurricane. If it's tornado season, you might get a tornado. If it's the monsoons, you might get a flood. And this happened on the precise day, on the precise price. Maybe it was random, or maybe everybody knew but you. And if that's the case, I would get pissed. And I would obsess with knowing more so this never hits me again as a surprise. I love you, babe. That was real. I got to jump. Peace on earth. May the pips be with you. May your profits be above average. And if you're a subscriber to the TRADARS.com analytical platform, I will see you at 4 p.m. We'll do some day trading. What do you stink? Smell like a plan? And then everybody that's subscribed to investorbootcamp.com for the 100 hours of training, guess what? We voted on our last meeting to move Wednesdays over to Tuesdays and Thursdays. So we're going to double dip every week and go through the monetary policy framework. And I think we're going to do managing the balance sheet at a commercial bank and then managing the balance sheet at a central bank. So there's 3 hours of lecture right there that we'll cover this week. And so we'll break that down. Lecture 1 will be on Tuesday at noon. Lecture 2 will be Thursday at noon. Yeah, so make sure you put that on your schedule. I don't think I sent out an email. I don't think I changed the calendar. It's just like you should know. Cool. And so I'll see you soon at Romper Room. Romper Room. Bend, stretch, reach for the stars. Here comes Jupiter, and there goes Mars. Bend, stretch, reach for the sky. Stand on tippy toes. Oh, so high.